Hello and welcome to Within the Frame. Coming to you live from Seoul, I'm Han Da-eun. The U.S. Federal Reserve has begun its two-day meeting for July, with market watchers eagerly anticipating signals on when it might begin cutting its benchmark interest rates. The meeting comes as the U.S. stands at a crucial crossroads after holding the influential rate at 23-year highs since last July. And this as the Bank of Korea deliberates on the timing of its rate cut amid weaker than expected economic growth and soaring household debt. Meanwhile, cash-strapped e-commerce platforms TMON and WeMakePrice have filed for court receivership, further delaying payments of pending settlements to sellers. For an in-depth analysis on interest rates and liquidity crisis of TMON and WeMakePrice, two of this week's hottest issues, we have Shim Myungkyu, Associate Professor of Economics at Yonsei University, joining us via Skype. Thank you for joining us.
Thank you for having me.
And joining our conversation from the U.S. is Professor Kim Ha-gyun at Texas A&M University's Mays Business School. Always a pleasure to have you with us.
Pleasure as well.
All right, Professor Shim, let's start with you. Do you expect another rate freeze from the FOMC meeting?
Yes, my expectation is that there will not be an immediate rate cut at this FOMC meeting, while some economists argue that the Fed should cut the rate as soon as possible, which is the argument based on the relatively weak performance of the labor market in the U.S. The most important factor that I think is that the inflation rate is still above the Fed's target inflation rate, 2%, while the inflation rate has been stable at around 3.2 to 3.4% for about a year. It has not become lower than 3%. And I think this implies that there are still factors making the inflation rate to be above the target rate. And raising the interest rate too early might have a perverse effect, especially increasing the inflation rate again. And I believe that the cost of inflation is greater than that of a recession, which is suggested by the previous research. I think the Fed will wait a little bit more. And also, the Fed's sudden change on its stance on the monetary policy may signal the market that the state of the public economy is worse than initially thought, which can generate a self-fulfilling recession.
So some economists argue that the U.S. Fed must seek an early rate cut beginning this month, but you believe that it's not yet time. Professor Kim, this week's FOMC meeting is considered to stand on a critical juncture, it's to stand on a critical juncture of its rate tightening cycle. Do you anticipate a signal of rate cut in September aligning with market expectations, and do you expect a baby step or a big step?
As your question alludes, this week's FOMC meeting is less about July, but rather more about the future projections such as September and November. So to your question, yes, I think a high chance of the rate cut in September is expected. According to the most recent data from the Fed futures market, the Fed Watch, about 97% chance Fed rate cut is Fed rate actually going to stay at 5.25 to 5.5% this time, but about like 88% chance 25 basis point cut is expected in September, and about 12% chance a 50 basis point cut. So according to the markets and also the analyst, or so the anticipation wise, baby step is about like 80% or above like 85% chance, and about like less than 15% chance of the big step of the cut. Of course, everything depends on the data, the data releases in September and the forward. So especially about the inflation. Recently, the inflation data has been nice, actually, according to the Fed's the standard of the lowering interest rate. And also the labor market has been a bit weaker. So I think the time is kind of ripe in that the rate cut is going to happen. But still, if we look back like the last year and this year altogether, inflation data has been somewhat volatile. So it's going to quite depend on the next time in terms of the data release to see how this actually will happen, whether it's going to be the small change or a big change.
So the U.S. Central Bank is expected to keep the benchmark interest rates unchanged this week, but when it'll start cutting rates will depend on the key U.S. data that will keep rolling in going forward. Now, Professor Shim, calls are growing that South Korea, too, should not miss the golden time for a rate cut. Given the weaker than expected growth of the Korean economy in the first half, when do you project rate cuts to begin?
I also expect that there will not be a rate cut in the upcoming meeting, but maybe the decision on the rate cut can be possibly made later this year. While the inflation rate has also steadily decreased to 2.4% in June, which is about 1 percentage point lower than last December, we have versus seen this number last July. Last July, the inflation rate was also 2.4%, but it then steadily increased to 3.8% until October. This implies that the decline of the inflation rate during the first half might be driven by seasonal factors rather than changes in the systematic factors to lower the inflation rate. Also, given that we have Chuseok in September and there have been heavy rains during the last month, might drive the price of agricultural goods up again, which can be a potential threat on the inflation rate. Furthermore, as I pointed out earlier, the Fed might postpone its decision to lower the interest rate, which gives more room for the BOK to wait more. Taking these factors all together, I think the optimal strategy for the BOK is to wait until the uncertainty surrounding the inflation rate and the Fed's policy become lower.
BOK Governor Lee Chang-yong has said earlier this month that conditions are ripening for a policy pivot amid slowing inflation, but you believe it's too early to call when rate cut would begin for the Bank of Korea as well. Professor Kim, the Korean economy had posted a surprisingly strong growth in the first quarter, but it contracted 0.2% in the second quarter. What's dragging down the growth despite modest export recovery?
Multiple factors can contribute to this downturn. As you mentioned, the first quarter has been strong. So obviously the step is higher. So the growth actually to become higher as well in the second quarter, it has to exceed the expectations and also the first quarter. So it's a bit harder hurdle. Having said that, the GDP growth breaks down to obviously consumption, investment, government expenditure, and net export. Net export is export minus import. So even if the export is a bit in recovery mode, if consumption, investment, or it decreases or the import increases, then clearly the GDP growth actually can go down. And I think that's what happened. So if you look at the details, the private consumptions fell by about 0.2%, which is about the same as the GDP contraction in the second quarter. And also the fixed investment part dropped, in fact, rather significantly, about 1.3%. So I think it has probably it comes from the many things, but according to the data, it looks like equipment investment, transportation sectors and stuff like that actually seem to be the contributing factors. And also the import has been increasing slightly. So that all contributed that slight downturn of the second quarter. But like I said, it's a bit too early to say something about whether economy is in downturn or something like that. And the Q3 and the Q4 data should be there to tell more about the details.
Dr. Shim, despite the minus growth in the second quarter, the government maintained its previous growth outlook for Korea this year at 2.6%. Major global financial institutions, meanwhile, revised up their previous estimates to 2.5% or 2.6%. What's your projection?
Yeah, in terms of the projection on the growth rate, I also have the similar view with the IMF and other major institutions and also the government of Korea. One of the most important factors, I think, is more positive view on the world economy. The IMF has recently adjusted its forecast on the world GDP upward by 0.1 percentage point, and that on China's GDP upward by 0.4 percentage point, which is one of the most important trade partners by Korea. Given that the Korean economy heavily relies on export, especially China and the US, that takes about 40% of the total export by Korea, greater growth around the world, including China and the US, can lead to higher GDP. And that seems to be already partly reflected by substantial increase in export during the first half of this year, which is especially driven by ICT and automobile exports that play important roles in the Korean economy. So while the very recent growth rate was negative, so maybe not the good, but I do not expect that the year-on-year growth rate would be that different from the previous forecast.
Professor Kim, switching gears to the liquidity crisis of e-commerce platforms TMON and WeMakePrice. Some customers have succeeded in getting their refunds, while others are still anxiously waiting. And it seems the situation is more severe for sellers, with financial authorities estimating their unsettled payments at around 210 billion won, or roughly $150 million. Give us a rough estimate of expected financial damage for customers and sellers.
Yes. In terms of like this business structure, if the consumers have paid their prices to the TMON or the WeMakePrice, and if the sellers have sent their products to consumers, and if the TMON and WeMakePrice pay these to the sellers, there should be no problem. The reason why we have this problem is because the TMON and WeMakePrice, who actually hold the money from the consumers who paid, are not really going to the sellers. That's actually why the sellers have the bigger problems. And the main reason I think it is having this type of the issue is the business structure in terms of the settlement structure. And basically the amount of the damage is going to depend on how long this is going to take for this money to move from one place to another. So the payment cycle, basically, according to the TMON and WeMakePrice, it's about 2 months for this after sale that money actually finally goes to sellers. And clearly, because of this, the initial the damage, as you mentioned, is about like $150 million. But this is for the May, and then June and July ones actually can snowball to increase the size of the damage for the sellers. And according to the estimates, like the June one seems to be about like 600 millions or something, and July one could be also something. It's not as big, but I think also big. And as you can see, because of this mismatched, actually the structure, if the sellers start leaving and also the buyers leaving, then clearly the amount of the money that can actually help pay the sellers will decrease, and that's going to be main issue. So clearly, over $1 trillion, 1 trillion won actually can be potential the damage.
Over 1 trillion won, because the damage, the financial losses, is likely to snowball going forward. Professor Shim, TMON and WeMakePrice are both owned by Singapore-based e-commerce company Qoo10. Well, Qoo10's aggressive business expansion is being blamed for the crisis. Its chief executive, Koo-young-bae, has been barred from departing Korea. Give us a detailed account for our viewers of how the crisis all began and what went wrong.
I think the root of this crisis is the unprofitability of many open market platforms in Korea. The TMON and WeMakePrice, together with other similar platforms like the Interpark or 11 Streets and the others, I think they share similar sales strategies, and the open market platform industry and the intense competition between the firms substantially lower their profitabilities. And I think that is kind of the nature of this industry, which makes its firms to differentiate from the other industries. So given that the unique sales strategies and unique products are not easy to make in this industry, the competition between such firms would be based on lowering prices that they sell, and this has been critical for them. In addition, the success of Coupang and Naver in the market platform made most of other platforms lose their customer bases, which worsened the problem. And of course, I think the wrong strategy taken by the owner of Qoo10 is also another main reason why this liquidity crisis has begun. And it seems that the objective of Qoo10 was to list its logistics subsidiary, Q Express, on Nasdaq based on increased sales and market shares by acquiring underperforming platforms such as TMON in Korea. But it was a really risky decision because the platforms Qoo10 acquired already lost their grounds based on profitabilities, and they lost their customer bases. So they could not make enough profits to increase the sales and all the profits. But the CEO did not make enough effort, I think, to improve the firm's profitabilities, but only exaggerate their sales through discounts or similar strategies, which results in this crisis.
It turns out financial regulators were aware of Qoo10's liquidity troubles from years before, but let it slip due to lack of regulation. So it seems addressing regulatory blind spots also are crucial to preventing similar cases in the future. Professor Kim, a Seoul court has begun the process of screening TMON and WeMakePrice for their court receivership, freezing their assets and debts. But it's expected to take a considerable time until sellers will get their unsettled payments. What's the expected trajectory of the liquidity crisis from here?
As we expect, this type of things are hard to settle. And even if all the assets are frozen and also the legal battles begin, obviously the Qoo10 probably already have thought about this carefully, and then they try to basically slow down the process as much as possible, and also they try to minimize their damage. So clearly it's going to be a hard game. And then obviously the sellers as well as buyers, actually damage is going to increase, in fact. So clearly, as we can expect, probably this has some similar features to a bank run. So in this case, there's not much way other than some help from the last resort lender. So in this case, probably government. So it is very important to claw back the damage from the liable, the person or the firm. But while it takes time, it is important to help the sellers. Yes, there could be some debates about like whether this is the right thing or not. But given that this has the feature of the contagion, probably the liquidity crisis is going to be shortened if the government helps as quickly as possible, which I think it is what's going to happen. And then I think, somewhat longer battle of like these legal court stuff actually until hopefully the government can claw back, and also the consumers and sellers can claw back some of the damages from the companies. So I think that's probably what's going to happen.
And since we have a bit more time left, Professor Shim, we have one more question for you. How do you gauge the impact of the TMON and WeMakePrice liquidity crisis on Korea's e-commerce industry? Because we're sensing more dangerous signs, more dangerous signals that it's spreading to other affiliated e-commerce platforms as well, like Interpark, for instance.
Yeah, I have not analyzed by myself, but I think there is a negative spillover effect. So this crisis is not just restricted to this particular sector, but it will have the impacts on the other sectors like the electricity sales or the others, because they have relied on this platform, and as well as the travel sectors. So maybe the negative effect could be much worse than we initially expected, because it can create more liquidity crisis on the other sectors, and this kind of negative spillover effect, I don't think we have seen this kind of event before, but given that WeMakePrice and TMON and the others took important roles in terms of spurring the trade between sellers and buyers, and I think this kind of effect will be greater than what we initially thought, as I said.
And Professor Kim, would you like to add to this?
Yeah, I agree with what the Professor Shim said. In addition, I think this is kind of the typical shakeout pattern. So clearly, many this kind of the less profitable firms actually will die, basically, and then the giant like Coupang and Neighbors, actually the market power is going to increase. So the platform itself is not going to disappear, but only for those who actually can make profits will stay. And therefore, the kind of the battle for this monopoly power and also the government regulation is going to kind of have like a tug of war for the next actually a few years.
All right, we'll conclude our discussion here, but we'll continue to closely monitor related developments to stay ahead. Thank you, Professor Kim, as always, for your insights.
Thank you.
And Professor Shim, we appreciate you taking the time to speak with us.
Thank you.
And that brings us to the end of this show. Thank you for watching, and be sure to tune in same time tomorrow to join our conversation. Goodbye for now.